Hello, advanced financial planning students. So, hope all is well. Hope everybody's having a good weekend. So, this course moves so quickly. We are now in week 4. So, during this week, we will be halfway through the course, but kind of a rinse and repeat this week. So, you're going to be reading chapters 10, 11, 12, participate in the forum discussion, and continue working on your homework problems. So again, start thinking about that final project, piece some things together. I'm just looking for a PowerPoint. You can look at the details in the syllabus and more within the course, but don't wait till the last minute to work on that. And if you have any questions on that, do let me know. But chapters 10, 11, 12, we start to look at first chapter 10, purchasing a home, kind of one of the I'd say for most people, a major life purchase and decision. So begs the question of whether do I rent or I buy? You are going to probably have a family, be there at a period for a long time at a specific place. May want to look into buying, but don't discount renting either. It just kind of depends on your situation, depends on your trade-offs. There's a lot involved with maintaining a home and paying for all the expenses and the breakdowns and all those things. So some people like that flexibility of not having to deal with all those things, and they don't need a lot of space. So it just kind of depends on your situation, your time of life. But with this, the chapter, probably the biggest emphasis the chapter is going to be on bottom line, try to make a decision about what kind of home you can afford, where do you want to live. I remember I've been in my house for 14 years, and we lived in Prairie Village, Kansas. It was a house that I bought when I was single back in the 90s. I paid $105,000. It's probably worth $250,000 now in Prairie Village, Kansas. But it only had the one bathroom. It wasn't practical for us as we had a young family, so it was time for us to move, and we were able to find a house that was affordable in Lee Summit. But with that, the biggest piece is, how much house can I afford? What is the payment? And all the other expenses that you have, credit unions, banks, mortgage companies, they look at these ratios, determine, what is the ideal amount that you can borrow to still reduce the risk. After the subprime crisis, there was a lot more controls put in place. Before subprime, it was kind of anything goes. Anybody could own a house, and they didn't really care whether you could afford it or not. It was a lot of bad ethical decisions that were made and put people in bad positions. But there are decisions you have to make, whether you want an adjustable rate mortgage, get you into a lower interest rate, or a fixed rate. I'd probably default more to a fixed rate. But interest rates have been historically low for a long time, so it may behoove individuals. I think they say that the average person lives in a home for about 7 years. So you may get a big benefit up front, have a higher cost at the end. But again, that you're trying to reduce your overall cost or expenditure for whatever your living expenditures are. So, and I'm not a big fan of buying a home for an investment. I think it's a place where you live. You try to maximize your level of happiness, try to live within your means. But housing can be so volatile, as we did see in the subprime crisis, and we've seen recently. We don't know what's happened with COVID-19, especially if our economy goes in a tailspin. People could be upside down in their houses, so it's just hard to say. But I'd say there's other better investment alternatives than just looking at your house, even though it is a major investment for a lot of people. Someday, they either plan to sell it to retire to somewhere in a condominium, somewhere easier to live, or going into that next house. Okay, but I think the mistake a lot of people make is maybe overextending themselves, and I'm kind of interested to see what happens in this post-COVID-19 crisis. People that have lost their jobs, that are living in houses they can't afford anymore. I saw a lot of that after the subprime crisis. Just people buying houses that were just not realistic, and they couldn't afford the property taxes and maintenance and the upkeep. So a lot of those homes foreclosed. Chapter 11, auto and home insurance. Again, this kind of ties into risk management. The different types of coverage. We'll start off with auto, the idea of liability, Part A, B, medical, C, uninsured motorist, and D, the comprehensive. I'll give you an example. This weekend that I'm working on, my son's Toyota Camry finally broke down, so the motor is gone. It's a great personal financial decision, because I'm trying to make decisions, that do I just sell it for scrap? Do I just sell it for parts? Really, it's all the hassle that I have to deal with. I don't think I want to list it and have to deal with that. And then trying to find a replacement car. What's a reasonable car for a teenager to have? Making even personal decisions whether I should probably I think what I'm going to do is just pay for it outright. Try to find a car $2,000 to $3,000 that I can write a check out for my home equity loan. That way I only have to have liability insurance. But if I take out a loan, I thought maybe my son should start to develop some credit, take out a loan. But once you take out a loan, you have to have a lien, and that also means you have to have all full coverage on insurance. So, it's all those decisions. It's a great example of how to minimize your cost, what's realistic, and then also the uncertainty whether whatever used car I buy, is it a limit or not? Is it going to last? So I'm trying to keep the cost low. That way, if it does go bad, we're not out a lot of money. I can live with the loss. So, but if that too, also home, protecting your home. The idea of protecting its personal property, liability. The book's going to talk about umbrella insurance, but it's also not to underinsure yourself. All of us have insurance agents. Hopefully they're making good, reputable decisions for us. With worst cases to be underinsured if something happens, especially with auto, liability, there is the minimum on states. You could go with very minimal. You could have very high deductibles, but it could also put you in a very bad position financially if you cannot afford that deductible. It's a very high deductible, or if you're not covered enough, especially if it's an auto or anything, that you're liable in your home, you could get sued. And that could be taken out of your personal property, garnished wages, whatever it would be. So, be smart about those things. You want to insure it up to the point that is the right amount of coverage that you need as an individual. And the last, chapter 12, just kind of deals with discussions of health insurance, disability insurance. One thing I'll tell you about disability insurance, it's probably the one that most people ignore or don't really think about. All my research that you are much more likely at some point in your lifetime to take out a disability claim than you ever be able to make a claim on life insurance. So sometimes I suggest, that you look at your employer to see what type of disability insurance they offer. But, I've seen it far too often that, somebody injures their hand or they break something, they're not able to work for a short period of time, and there's a loss of wages for that period of time too. With health, that's a tricky one. That's a big one today. I would love to retire early, but the reality is that trying to pay health insurance on my own, like my goal, I'm 52 now, my goal would be, can I retire early at 60? Well, that'd be like 5 years of paying like $20,000 in premium. So unless I'm very wealthy, it's probably not going to happen. Now there is what we call like, Medicare. When you turn 65, there's Medicaid for the poor. But most of us are going to be dependent on trying to figure out which type of plan works best for us. There are different types of plans, HMOs, PPOs, the amount of deductible that you want to pay. There's the use of health savings accounts now. I use those with the PPOs or the high deductible plans. You're able to use the health savings account. I've been putting money in that for many years to build up. My wife does it at work, and we don't even touch it. So there's restrictions on those, what you can use it for. But it's a nice vehicle too, to kind of a supplement to your retirement, because you can build that up for potential future medical expenses, or current, but also potential future that is not covered by insurance that you would have to pay. So, all right, well, I'm looking forward to the forum discussion post. I'm interested to see what you write about this week, what you learn about. There's a lot of broad topics to talk about with all these, with property, home, auto, and home insurance, and health and disability insurance. So, interested to see what you post. But if you do have any questions, do send me an email. Otherwise, I should have everything graded by Monday or Tuesday of this week for week 3. Other than that, have a great week, and we'll talk to you online. Take care.